Well, good afternoon, traders. And certainly if we look around the markets today here in Asia, we can go straight into the equity markets and see that we are seeing a bit of selling coming through. These markets are up one day, they're down the next. And today, as we close out the week, you can see the Australian market probably outperforming a touch there, down 20 points on the session. The Chinese markets are under a little bit of pressure there. You've got the Chinese A50, the CN50 down 53 points. The Hang Seng down 149 points or so. And then you've got the Japan 225 down 123. So a little bit of tweaking around the equity portfolios, a little bit taking off the tables. You can see that our opening calls, again, probably a bit mixed here. You've got the FTSE are pretty much unchanged. You've got the Wall Street cash there up about 55 points at the moment. We've got the Germany DAX up 13 points and S&P up about 4 handles. But there's a little bit of selling coming in based on what we've been seeing from these Asian markets. Now, we're going into the G20. There's already a few meetings that are underway, a few headlines coming through, none of them been overly market moving. Well, if we go into tomorrow's headline one there between Xi and Trump, we've already seen a few headlines coming out, namely from the Wall Street Journal, where we've seen one story talking about China demanding that we see the ban on Huawei and also any kind of trade tariffs that are already in place being lifted. Larry Kudlow and Trump have come out and said there's going to be no preconditions for the meeting. But certainly, expectations are pretty low as we go into tomorrow's meeting. Is there going to be gapping risk from any headlines? Perhaps, but I think you've also got to look at the idea that we're going to have China data, PMI and services PMI comes out on Sunday, and depending on how that goes, the market's expecting that PMI, the manufacturing number, to continue to be in contraction. So again, that could be a risk. If we see a really weak number, that could see things like the Aussie dollar, you could see the CNH, the offshore Chinese yuan, certainly S&P futures and commodity futures under a little bit of pressure on Monday. We'll have to see how obviously that goes, but that's something to consider is your exposure as you go into the weekend. One, we've got G20, but also that China data. My suspect is that the high probability is we don't see too much of a gapping risk, but something to definitely consider. In FX markets today, well, you've got very, very tight ranges, as you can see there. They're very, very limited moves. Dollar yen's down about 16 points, very much in line with what we've been seeing from some of those Asian equity markets. You've got euro dollar 113.67, pretty much fairly flat on the session. In fact, if you have a look at if the euro dollar was to close at these current levels, we would have had euro dollar closing in pretty much a 2-pip range, 113.67 and 69 for the last 4 sessions. So implied and realised volatility, very, very low coming in euro dollar at the moment. So certainly something to consider. You've got Aussie dollar just sort of flirting with that 70 handle again, looking like a few sellers are kicking in. We do need to keep an eye on the Aussie dollar as we go into next week. There's a really important RBA meeting that comes out obviously at 2:30 on Tuesday. The market's giving it a 71% probability that we get a rate cut there. So back-to-back rate cuts from the Reserve Bank. There's 8 out of 26 economists calling for rates to be kept on hold. So the consensus is that we get that rate cut coming through. It's not fully priced in, so we could get some volatility in the Aussie dollar, something we're watching there. And also, if you look at the daily chart of New Zealand dollar against the US dollar, one to watch there, because if you can see from my chart of the day, which you can find on the website, we have broken out through the neckline of the double bottom, and that suggests that you could see a move up into 69. We are seeing a bit of sellers coming into that cross, pretty much in line with the de-risking, the modest de-risking we're seeing in Asia today, and something to really focus on there. Bear in mind that tonight at 10:30 we get core PCE coming out of the US. The market is looking for that to drop from 1.6 to 1.5%. If we go below 1.5%, then I'd expect dollar yen and dollar crosses to come off quite sharply. The idea that we're going to get a July cut of 50 basis points would certainly move up a little bit there on the back of that. And then I think shortly after that situation, we're going to have the University of Michigan consumer inflation numbers there. And we're looking at 5 to 10-year inflation numbers specifically, because that's been trending significantly lower, and actually at 2.2% on the last print was the record numbers. So again, just something we're watching, because we are watching a lot of these market-based and survey-based inflation reads to come through. So a lot to focus on. We are watching a lot of this headline risk coming through, and certainly have a look at gold price today. Gold price is, currently sitting $14.21, up $11. We're seeing buyers coming through. It's good one-way traffic coming there from the bulls again.